I think in the past 6 months is really where the ramp up goes, right?
Right after the GeniusX pass, stablecoin-backed card growth has been explosive for us. We see about 40x growth in GTV and about 83x growth in the number of cards issued.
We have now over 130 programs in 50 countries. At some point, we probably should stop counting the number of countries, right? Because one benefit of a stablecoin program is stablecoin-backed emerging markets. And what's one commonality of this emerging market? Currency volatility, but also limited access to financial systems, right? So very interestingly, stablecoin then helps solve for that.
How much does it cost for you to onboard the customers? How much does it cost for your customers to fund the account? How much then will you need to make money from the customers? People have been saying that stablecoin will disrupt and change the bank. I don't believe in that. And we always say that banks are important trust anchor and partners. We have worked with some of the best like DBS and Standard Chartered.
But it's really trying to address some of the questions we see from our traditional partners. I see a lot of activities in this space, but I don't know how to start. Advise me on what I need to do. Really, what we're hoping to do is to help drive the growth, accelerate the growth in this space because we're seeing real world utility and hoping that eventually it helps. Go back to what the Visa vision, right, which is the best way to pay and be paid.
Welcome back to the season 2 of the StraitsX podcast. In season 1, we talk about the future of stable money, how stablecoins are shaping the future of money. That future is here. And now we are ready to talk about how stablecoin and stable money is being used at scale. Today, I'm very happy to be at the Visa Innovation Center. Here we have with me Adeline Kim, someone I consider a mentor and an old friend in the fintech space in Singapore and Asia Pacific. She is the Singapore and Brunei country manager. Welcome, Adeline. Fantastic to have you here.
Thanks, Tianwei. Welcome to Visa. The word old was a bit sensitive, but okay.
I was really careful about that.
Actually, do you remember when we first met? Interestingly, when we first, of course, Visa and StraitsX work together now, but when we first met, actually, we were not partners yet.
Yes.
So we were, if I recall when we first met, right, we were both part of the Singapore Fintech Association Payment Subcommittee.
Yes.
I was often a little bit late.
Same, every day.
And I was,
that's how we know each other. We saw each other the leave.
Yeah, but it was fun. I think we first, it's always fun to meet for a common cause, driving fintech activities in the market. And I think since then, of course, our companies work very well together, and we've, of course, also gone for our kopi and other chats.
Yes. Just like I shared, like first impression when I was there was like, it was quite a formal structure for us for the first time. And actually, we just at then were starting the partnership with Visa itself.
That's right.
That took a while to get ramp up and stuff.
Yes.
But I often only remember the meeting after that, the kopi and other sessions, and how you are very maturing and very motherly and always been sharing food with us.
Okay, now you said old, you said motherly. Let's see how many other words you're going to use.
I think
words.
this I had to be, okay, it's okay. Nurturing is actually okay in some sense. Always good to have a female strong leader, which I know you are one in this industry itself.
Thank you.
So maybe we switch gear back to the actual discussion today. I think after the GeniusX pass, StraitsX is one of the earlier players in the stablecoin space, but we pride ourselves being a payment company. I think that's something that is quite similar to the fabric of how Visa is itself. But I think together we have both seen the global impact of stablecoin. I would love to hear from your personal perspective as a practitioner in the fintech space, and also probably also from Visa perspective, how this journey has been. Before when you first heard about stablecoin itself, how this have changed for you in terms of your first encounter, and how things have now evolved after the GeniusX pass for you and for Visa itself.
Yeah. So maybe I'll start off with just myself, right? I think as a casual investor, like many people, when crypto first started, I think I was dabbling a little bit, playing around different coins. Unfortunately, I didn't buy the right coins, I think, fast forward now. But, I think that was interesting because as in the payments industry, you kind of want to know what's out there and what's the latest, right? And to some extent, that's how Visa's journey has been as well. Actually, our global crypto team was set up in 2018. So actually quite long ago. And that was actually, if you remember, in history books, in the trough of the bear market. And since then, the team has been kind of, I would say, like me, dabbling a little bit into, maybe a bit more serious than me, but we've done, different pilots, including buying an NFT, during those days. I think only in recent 2-3 years, did we really see stabilize. I think the POCs have really reached an inflection point.
Yeah.
I think, like you said, the GeniusX is that inflection point. right after the announcement, our CEO went on national TV to declare that, Visa's all in on stablecoins. And I think it's not so much a declaration, but the acknowledgement that the Genius Act has really established a set of boundaries and rules for Visa, players like StraitsX, and I think more importantly, participants of the ecosystem, right, to know what guidelines to operate at. And it also gives legitimacy, I think, to what companies like yourself has already been pursuing. And even for big financial institutions, right, I think that they no longer have to justify, I can imagine a board meeting, say 24 months ago, to be a lot of justification around why they should be going to this space. I think with everything being more legitimate and more legalized or more regulated, then really it really created a momentum. And that's really where we see the programs ramp up.
Yeah. Definitely, like I said, we've been very fortunate to be one of the earliest folks to do this out of Southeast Asia itself. And the skepticism that we initially saw have definitely transformed. And we've been talking about institutional adoption. And Visa is definitely an institution. And I think that has we have definitely crossed the chasm over here with Visa and likes of Grab and other players like Ali with us over the years have come in to really support these real world use cases that we're very, very a strong champion and supporter for. Yeah.
I think the merging of, I think, again, if you go back to, say, 12, 18 months ago, right, the swim lanes were very separate, right? Whether it's Web 2 versus, it's almost like a face-off, Web 2 versus Web 3, there's DeFi, that a lot of different terms being used, but the swim lanes were in parallel. Even before Genius Act was announced, with stablecoin and some of the use cases that we've been working jointly with, the swim lanes were converging. Now there's a very nice path, right, where the swim lanes, there are different swim lanes, but definitely I think the whole, Web 2 to Web 3 integration and how I think a player like Visa can still participate in the ecosystem and actually be helping to accelerate the ecosystem, I think is what is really exciting.
Yeah, I think this is what, something that we've been talking and advocating about, right? The payment at scale really only happens when, the magic disappears behind the scene. It is invisible to the end user. And that's something that I know Visa's networks of 175 million merchants is definitely a game changer in this space, right? Because consumers have been very used to the experience of the Visa Pay Wave and likes of paying and tapping and go with a card itself. And stablecoin is just like what a lot of folks talk about, a stablecoin sandwich or a means to an end, right? So back end innovation. And we are seeing adoption at scale, which we can talk about later on, when you can actually make that whole technology layer disappear magically behind the scene and the user experience is superior. So maybe we change a bit of topic to provide more context, right? Just actually exactly on what we're talking about, right? Stablecoin itself, to understand why it matters, I think we have been very focused on real world problems. Our tagline here has always been, right, stablecoin rails for real world payments. Because at the heart of it, StraitsX is a payment company, right? We all both joke about this as well, and I think just mentioned we bought NFT, we bought a different coin, not a financial advice, not trying to advocate this. I think I see this more from a technology's lens at heart. I'm a geek. I would like to try out new things. So helping me playing and dabbling with this thing actually helped me understand the technology itself. But stablecoin on the other side is definitely where the price is stable, right? Not supposed to go up. So as a business that's running a payment company, for us, I think similar to Visa itself, transaction and actually real world use case matters a lot more to us because there's really zero speculation over here. But what we are seeing here is that, there is real world problem that can be solved with stablecoin, especially at what I have been passionate about, right? I started the payment company about 10 years ago right now. So we focus on Southeast Asia. Interestingly enough, we were focusing on alternative payment before, starting on Visa and card because, digital penetration is not very well. And there's something that I heard a lot, and we talked about this before. It is actually very expensive to be poor. I think there's an economic article that actually talk about it because most of Southeast Asia, when we first came here about 10 years back, and it's still a problem today, is a prepaid world where, digitization, postpaid, credit card is not very well covered itself. And this itself creates inherent problem and actually pain to the consumer itself because, paying for services, because they have to go through a middleman and going through prepaid services, it's actually quite expensive. The markup for a typical, prepaid top-up in Indonesia, like a telco bill can be like 10 to 20%, even though the dominant innovation is very, very low. So we have been seeing digitization has ability to change that. Over the last 10 years, we have seen a lot of e-wallet players coming in. But in general, we're still not seeing this last pyramid of folks that are being able to solve. But we're starting to see a perspective right now with stablecoin and with card itself. This itself is changing. We'd love to hear your perspective and how you're seeing it again from a personal view perspective and also from how Visa is seeing this.
Yeah, I think if you talk about Southeast Asia and some of the use cases or growth that we've seen across the world, financial inclusion is always something that, we people in the payment industry care a lot about. It's not just about educating them about, how to invest your money, but actually availing the efficiency of the payment ecosystem to everyone in the pyramid, right? And traditionally, it's been tough. It's been a long journey. Tough because there are some infrastructure challenges that we see in certain markets. Indonesia has got, how many islands, right? And also the other thing that's really tough is because these people generally, if you talk about card, let's talk about card, which is something we're very familiar with, right? Yeah. Credit cards, the potential and the outreach of a credit card is capped because you need a credit history to start with. And that's why in the recent years, wallets have become really popular.
Yes.
And wallets, whether it's a debit, funded by a debit card or funded by a prepaid, that's because it's more accessible. And I think really stablecoin, if you think about it, helps. Beyond stablecoin as a form factor, the concept of availing a non-credit facility prevails, right? And of course, when you have stablecoin funding a wallet, that really helps. So that's that kind of maybe a segue to like some of the use cases we are seeing to support, Tianwei, what you said. So definitely availing a non-credit option through a wallet to a big group of customers is one big use case that we're seeing. By availing that, immediately they can have access to the 175 million merchant network that we have, and that really helps. So that's the first use case. The second one, I don't know whether you've heard about, I'm sure you've heard about this G20 goal to lower the cost of remittance.
Yes.
In most part of the world, especially in Southeast Asia, remittance is actually, Southeast Asia is a big remittance market, both originating and receiving. And the cost of remittance is actually, generally quite high.
Still very high.
And again, stablecoins allow for that, right? Last year, we made an announcement that as part of our Visa Direct suite of products, you can now actually pay into a stablecoin funded wallet. So that again allows for that. The third use case is actually quite interesting, gig economy. So I'm not, you mentioned just now, I'm obviously not a gig into the economy, but I think we can imagine, right? Today, if you look at social content and all, a lot of the content is actually created by content creators who are not based in this part of the world. They could be in Kazakhstan, they could be, in any part of
emerging markets.
Emerging markets. And what's one commonality of this emerging market? Currency volatility.
Correct.
And also currency volatility, but also limited access to financial systems, right? So very interestingly, stablecoin then helps solve for that because instead of being paid in their local currency, a lot of them actually prefer to be paid in stablecoin. And again, once you've got a wallet or a card that actually backs up the stablecoin, it allows you to then use cash out the stablecoin or use the stablecoin in merchants where Visa can be accepted.
I think this is exactly what we segue to the next topic that we are also observing as a very rapid growth, right? Like we mentioned earlier on that the weak currency and the needs for using a card to give accessibility and helping to reduce the cost of transaction on the daily life itself. I think it has been a rise of this segment of customers, what we know as Stablecoin Neobank, that really comes out, out of the blue of the last 12 months that we are, very fortunate to serve quite a few of them. And one of the things that we have observed, at least I think I would distilling it down to some of the discussion that we have, is down to 2 points. First of all, it's back to the currency weakness and the gig economy and the emerging market problem that we are seeing globally, whereby the global demand for, in some sense, a stablecoin is actually a global demand for the US dollars, right? Having exposure and giving an end user a US dollars account, we are both now sitting in Singapore itself, which is a very affluent country. We're very fortunate. Even that, it is not easy for somebody to have a US dollars account. It is not common for everyone to having a US dollars account. But then, maybe there's not much need in the first place. Like Singapore dollars is a relatively strong currency. We don't really have a need to hold another alternative currency. But you then bring this problem that to an emerging market, like you just mentioned, in the Philippines, the peso have been depreciating over the last 6 months, or is it in Latin America? This is a real problem, right? They do not have an easy access to a US dollars account, which most banks over there will make it difficult for them to get access to, while holding on to their local currency, continue depreciating their value. So a lot of these gig economy, internet economy folks will want to be able to say that they can hold, receive, and save in US dollars. So that's where we see a global, adoption of that kind of product, where just giving somebody ability to get a US dollar account via stablecoin, which is a lot cheaper, has been a game changer from a lot of product perspective. Then coupling that with, now you have a saving account with a US dollar account, you will be able to now attach as a source of fund to a Visa card itself, allowing them to spend it. Then which create what we talk about right now. It's like a bank account, but of course they're not a bank. This is the coin term is neobank itself. This is a game changer from a product perspective. But maybe we'd love to share your perspective from how Visa is viewing this category and how this itself is also changing the unit economy of running this kind of operation as a franchisee or as a business model itself.
So I think a bit of going back to history, right? Visa, when we first started, we used to be owned by banks. And of course, over the past 60 years, we've evolved a lot. And if you talk about categorization, a bit philosophical, but indulge me a little bit, right? We of course, banks or financial institutions is what we work very closely with. And then there are different, there are the non-FIs which are broadly categorized and partners like yourself sit in there. I think the whole concept of neobank is interesting because it's a spectrum. You have you could have potentially a player that's just offering a wallet. And their main objective is really not to offer a financial a product. The main objectives could be a platform that they are operating, a super app, but a wallet is a means to an end. And then you have players like yourself who are playing the infrastructure role, right? And for Visa, I think what we've been doing is to apply what we've learned in the kind of FI space and apply the same standards and support that we know works into the non-FI space. Like you said, the neobank and stuff, because we know that we can't cater to every single business model. But what we do know is that the same support structure that we had, whether it's fraud prevention, to your point, acceptance, contactless payments, for example, should apply to these neobanks, because at the end of the day, they're catering to the same set of customers that the financial institutions are catering to. And the newer, younger generation of our consumers are more impatient, right? They grew up, actually a lot of them, I've got, my elder son is 19, and he grew up, the first, other than, of course, the account that I opened with him or for him, one of the first financial instrument that he opened up by himself is a wallet. So a lot of these younger generation actually grew up maybe not understanding or not being fully exposed to the concept of banks. And that's where I think some of these, whether you call it neobanks, non-FIs, digital players, really have a very important role to play. And again, back to what Visa does, I think I feel very fortunate to be able to bridge kind of the traditional banking system that we're very exposed to. And that's still really, really important for the ecosystem with some of the newer trends and newer capabilities. And what's underlying is still that same Visa stack and reliability that everybody is familiar with.
No, maybe to just add on is what we're actually observing itself is, of course, the Visa stack gives them the accessibility to, instantly reach out to 175 million merchants, which is, the largest network that we have seen in the world, right? That gives the utility side of this thing. But from an operating model, what we have also observed itself is that, like I mentioned, giving someone access to a banking model, a US dollars account, is not easy because running on the traditional model of the SWIFT side, there's just cost of operating, right? We always complain that the banks are charging a lot, but the infra is just a lot more expensive. But with stablecoin, actually, transaction, things are being done in microcents, and receiving the stablecoin on the blockchain itself is almost zero at a cost. Of course, compliance cost side, right? But the cost of receiving from transaction side is almost zero, right? Or a couple of cents. So this is a major game changer from an operator of a wallet perspective itself, because typically the cost of fund is a major issue before you can think about your business model, right? How much does it cost for you to onboard the customers? How much does it cost for your customers to fund the account? How much then will you need to make money from the customers? Because we talk about financial inclusion, which I'm also passionate about, given our footprint in Indonesia and large part of Southeast Asia. But what we observe over the last 10 years itself is, no matter the amount of VC money to continue funding this, you cannot run a non-profit business, right? The customers must pay for itself. I think the game changer here is the fact that the cost of fund, because of a stablecoin, giving them access to a US dollars account, letting them holding a US dollars account right now is a lot lower than it used to be with this new technology. Then, which we can set and talk about the next step. Then the Visa infrastructure then enable them to do something with this account, right? So for folks that, like I shared earlier on, we started this journey with Visa about 3 to 4 years ago. We are also a major principal member of Visa, also a BIN sponsor. So we basically issue card as an infrastructure as a service. Usually it's behind the scene, co-branded cards, so folks doesn't know. But like in Singapore itself, some of the large clients that we have, which is not before this whole stablecoin wave, is like Chocolate Finance, which is a favorite app among a lot of this millennial.
So a Visa partner.
It's also a Visa partner. And they have been allowing people to really save and then get interest rate, just money market funds interest rate, while being able to spend it on a day-to-day basis. That has been a pretty big program that is run by us itself. But the new wave of this stablecoin right now is beyond the Singapore shore and Hong Kong shores, right? We're talking about folks like Ray.Pay and then now OKX itself that's been launching to our stablecoin product. I think this category is particularly interesting for us because for us, from our data, right after the Genius X pass, stablecoin-backed card growth for us, even though we have been running cards program for the last 3 years, has been explosive for us. We see about a 40x growth in GTV and about 83x growth in the number of cards issued for this kind of particular category of customers, just on card issuing as a whole. Yeah. This has been a major, surprise in some sense for us as well, because we're operating the infra for a long period of time. We'd love to hear what's Visa take on this particular category as well, whereby, is this something that you guys are observing on the global scale as well?
Yeah, definitely. I think you mentioned some of the players whom we work with as well. And to a large extent, I think in the past 6 months is really where the ramp up goes, right? I was talking to my colleague, my global colleague, and he said, actually, the growth chart on his deck, right, needs to be updated almost weekly. Yeah. Because the numbers are just, it's just one way up.
You lock the scale already. Yes.
Globally, actually, we now, and again, the number could have changed, because this was the number that I put earlier on, right? We have now over 130 programs in 50 countries. Oh. Yeah. And then at some point, we probably should stop counting the number of countries, right? Because one benefit of a stablecoin program and stablecoin-backed card, to your point earlier on, is that actually, to some extent, it's borderless.
Yes.
You can be, someone from Kazakhstan, for example, could be picking up the card, if the provider wants to target them. And I think that really helps us drive scale. I think next time we meet, whether it's over Kopi or the SFA Payment Council, the number will be very, very different. Yeah. And I think we continue to want to be, at least at Visa, want to be working with partners like yourself who see the vision, who share the same vision, right? You mentioned earlier that one of your goals is for payment to be invisible. And I often use a similar analogy, which is, no one wakes up saying that today I want to make a payment. Unless maybe if I need to transfer money to someone, then it's remittance. But you don't wake up saying, I want to make a payment. But you don't wake up saying, I need a coffee. I need to go down and buy a coffee. I need to go, grab something, a present for someone. And what sits behind then is the payments. So to a large extent, we want the same payment experience to be consistent. At the back end, whether it's your consumer and the merchants actually don't know that actually at the back end is someone who holds stable coins and is funding the wallet with stable coins, right? Offloading with stable coins. And I think that ubiquity and that invisible payments is what we jointly are trying to strive at.
No, I think definitely just saying about the same thing about payment being invisible. Well, at the heart of it, I just always mention StraitsX, it started as a payment company. Our DNA is in payment. Our day-to-day is about making sure transactions happen seamlessly. Now our new tagline is stablecoin rails for real-world payments itself. I think a lot of these things you can see it in both the product that we built and also basically because I started the company, the pain that we feel as an acquirer. Like acquiring business is very, very difficult. I always joke about the fact that my early days as an engineer and also a startup founder, I do everything when you're in the early days. The biggest problem is not convincing a merchant partners or CEO to actually adopt a new payment method. The challenge is also convincing the storekeeper, the operating folks on the ground that this thing actually works.
And retraining them.
Them.
For 60 years, they are very used to, taking a card. And now, of course, they've been retrained to allow tap, right?
Exactly.
Imagine telling them that it's a different ecosystem, it's tough.
So every time we know that, we always joke that, changing a payment behavior is like chewing glass. Like you would think that it's a very simplest tag. I'm an engineer, so I always tag is very easy. But you also forget the human touch involved in that. The staff that's operating there in the early morning, there's a different staff the night before. Yeah. He or she might not be as well trained with that. And both of us have payment experience, right? When you're buying coffee, if you're jumbling in front of the terminal and there's a long queue of people behind you, you get frowned at, people frown at you, you also panic. So like that is not something that will make your day, right? You just want to get coffee, right?
That's right.
So that the experience needs to be seamless. And I think with Visa side and with the card adoption that we are seeing is exactly that, right? Now that there's a lot of ability to give a lot of customers previously in the past in emerging market, ability to save in US dollars through stablecoin itself, ability to get a card because that might be a luxury to a lot of folks as well. Yeah. But more importantly, they can now shop at 175 million merchants worldwide in the same experience as anyone else have done. Yeah. And that itself, the merchant itself, or is it the user, the end user at the customer front end itself, will not know that there were stablecoin involved, right?
Yeah. And that's really bridging, kind of like I mentioned, the two swim lanes or the two worlds, right? Whether it's Web 2, Web 2, Web 3, because cards is something that's generally quite common knowledge to a lot of people. People are exposed to cards and they know how to make payments with cards. But that you're talking about, this segment of customers who actually hold stable coins for different reasons. So being able to merge, I think, the two behaviors and knowledge is really what I think gets us really excited.
Correct. And it's not just solving this from end user perspective, which I think is a big thing that we are seeing over the last 12 months. Like I said, mentioned earlier on, we have seen 40x growth in GTV, 83x over user card issued for just our card issuing program as a whole. Of course, also 130 partners. We probably see about 30 in the pipeline right now or already gone live. They are coming on board. But a very big part here is also on the merchant side, on the staff and the usage side. Like there is real benefit in terms of this technology, allowing settlement to be more instantaneous.
That's right.
And reducing the risk itself in terms of cost of fund, which is always a problem as a payment acquirer itself. I think we'd love to hear what Visa takes on this, because we have been through this enough as an acquirer that the delay in settlement, the weekend, business banking hours, is something that all merchants complains about.
Yeah. Actually, it's a good point. I think we've been talking a lot about consumers and getting really passionate about it. But if you look at the ecosystem, that there are, of course, the merchants, but actually we're also seeing stablecoin use cases for business efficiency. I'll just give two examples. I think one you mentioned, which is the ability to participate in the stablecoin ecosystem, but yet at the same time not have to do massive changes to your acceptance network.
Right.
So that's one benefit. The other thing that we've actually started doing is testing and piloting is actually tapping on the benefit of crypto, right, which is 24/7 settlement, which a bit technical, but I'll go and you know this because traditionally on weekends, actually in the traditional banking system, banks are closed, right? Hence, you can't actually settle your currency, and sometimes that means that merchants don't get their money until much later. So 24/7 settlement is what the industry is always aspiring to go towards. And stablecoins and crypto do allow for that. And with some pilots in that space. The other one that we've actually started piloting, and actually there are real customers on it, is actually to allow for merchants to pre-fund their account with us through stablecoins.
Yes.
Then you don't lock in your huge amount of fiat. Liquidity is then, kind of managed, right? So testing also some of these kind of use cases that are not transparent, but it's very, very important to the business owners, to merchants, to players, like yourself, because it helps, again, at the end of the day, drive efficiency and solve real world problems. Using your code.
No. I think that's why I say we always often go back that I mentioned many times before, that even though when we first embarked on this stablecoin project itself, is we say, you need three things for stablecoin adoption. Regulatory compliance is something that we are passionate about, based in Singapore, MES regulated. You need banking partners, which we all believe that, people have been saying that stablecoin will disrupt and change the bank. I don't believe in that. And we always say that banks are important trust anchor and partners. We have worked with some of the best, like EBS and Standard Chartered, to continue enabling this, enhancement of the rails. But the third part we all talk about is actually the hardest, right? Besides regulatory compliance, banking partnership itself, the third and most important part is about real-world utility and use cases here. And we touched on some of that. And exactly this is where I say a good part, we want to hear about the work that Visa is actually doing more on. How are you enabling global networks like Visa itself to be able to work with digital asset innovators? We consider ourselves one of that, but other players to really try and bring this forward to the next level itself. I think we started off, this journey has been a couple of years already, right? The Genius Act catalyzed this. We're already starting to see this hyper growth, at least from stablecoin neobank adoption itself. We'd like to hear, what is, Visa hoping to work on next itself in terms of trying to get this stablecoin acceptance to be getting to the next level.
You mentioned just now about growth, right? And I mentioned, last quarter, the numbers have really ramped up. We don't have 40x growth, but we have seen in the last quarter itself, last quarter of last year, a 4 times growth in stablecoin backed programs. And then the number will continue to grow.
Absolutely.
In terms of what we're doing, we continue working with great partners like yourself. I think, to be honest, I think I've been in Visa for quite a while. I think in the past, in this area is where we continue to be challenged. And quite rightly so. Actually, we want to be challenged because, some of the, why I say that we want to apply some of the Visa learnings in the traditional ecosystem into this new ecosystem, some are not applicable. And that's why we want to be challenged to say, hey, you often call me, right, Adeline, this rule may not be applicable. And we talk to MES a lot together and also separately on what we can do to really help drive. So I think being flexible around open-minded and flexible to what changes we need to make into our own network and ecosystem to allow for the growth of these programs. Is one way we're trying to expand this area. I think the other area is to continue driving new use cases. The few use cases I mentioned earlier, we think we have seen scale and we want to focus on these use cases. I think for me personally, the remittance use case would really help because the face-to-face use case is growing, right?
Yeah.
The remittance use case, and we know globally there's so much money exchange, money flows around, and that I think is going to be something that we will want to continue driving. I didn't mention, and this is not a sales pitch, but we have a big advisory team. We have started standing up an advisory service around digital assets as well. And this is in part to, it's not to advise, players like yourself because,
we're always happy to chat.
Guru in this, but it's really, trying to address some of the questions we see from our traditional partners, which is, I see a lot of activities in this space, but I don't know how to start. So tell me, advise me on what I need to do. So we're doing a bunch of stuff. I just gave a few examples, but really what we're hoping to do is to help drive the growth, accelerate the growth in this space because we're seeing real world utility and hoping that, eventually it helps go back to what the Visa vision, right, which is the best way to pay and be paid. And really the form factor doesn't matter, as long as the form factor moves through the same payment network that we've established and have successfully protected for so long.
Yeah, I think this itself is something that we are also passionate about. And from the numbers it's showing, it's definitely something we'll be focusing a lot of effort on because this is what will drive the next phase of adoption. But going back to what you're talking about in terms of advisory and stuff, I think this is the next step in terms of trying to get a larger part of what we call the Web2 folks on board itself. And I wouldn't say that we don't need ML and other compliance advice, but I think regulatory compliance and also getting the institutional to understand and being comfortable with this new asset class itself will still be a continual work that institutional adoption will be waiting for because only with folks like Visa having a trusted brand and the kind of network relationship with the banks and partners itself, taking a head start, helping to guide some of the other folks to come in, then the next wave of adoption is going to come by. And most of the numbers are really showing that this is just the first inning. We're in a very early stage, even though the numbers are super excited for the last 12 months, but we expect a lot more to come. And 40x growth is still something that I think we can do again next year. But maybe now to my favorite section, I have some fun with crypto terms. The audience have probably seen this before.
Don't test a Singaporean who has not done any tests for many, many years.
No, because sometimes this might be education content because we got asked a lot of time about all the crypto jumbo terms that people hear about. And I think unless you are in the space, you probably might not want to know. I would love to hear your perspective, Adeline, given now you're in this space, a Singaporean perspective, right? So maybe kind of change it up a little bit. We heard a lot about this stablecoin sandwich, or what we want to call stablecoin gatos or whatever you want to call it. Any guess? What does it actually mean?
Yeah, so definitely I'm not a crypto native, but I have learned some of these terms. From what I interpret it in layman's terms, stablecoin sandwich really, actually, the term is actually really good, or you can call it kaya toast, the Singapore version. Really is how you change from fiat, which is what we're familiar with, to stablecoin, transfer the money from stablecoin to stablecoin, and then you exchange it back to fiat currency.
So basically, it's
an A+ answer.
It's an A+ answer.
A- maybe.
Yeah, but basically, it's the three layers, right? You think about it. There's a bread, then there's the meat and the fillings or the kaya toast in between. Then there's a bread again, right? So the two bread itself represent the traditional payment method that we all know in, while the kaya and everything that's used up itself is actually where the stablecoin is actually interacting with, right?
That's a very Singapore answer.
Yes.
A++.
Thank you. So how about now? What comes to mind when we talk about last mile payment or crypto?
Okay, if I were to continue using an analogy, I guess the last mile is with the bread or the sandwich, what do you do with it, right? You must be able to eat it. I mean, why do we buy bread? You eat it, right? You want to solve your hunger. So I think that bite, the last bite, the ability to be able to, jokes aside, the last bite and the ability, I guess, to be able to then use the money in the last mile, I think is really important. And actually, that's why stablecoin programs has been so successful, because a lot of people have been like me, dabbling into crypto and all, right? Or buying stablecoins. You don't know what, you can't use the last. You can't use and that's the last mile part.
Correct. So
the bite.
Yeah, the bite and finishing up the food, right? Because instead of just buying the sandwich, you actually want to eat it. But I think this is actually, in some sense, you realize that it's not quite different from the world that we have been in for the last 10 years, right? Like, or 20 years. The fintech, like, this is what we've been always saying and advocating over here. Like, stablecoin is a means to an end, right? End of the day, utility matters.
Yeah.
And we are just translating some of the terms that we already know, because I think last mile payment has been talked about for years, right?
Actually, it's a good
so,
point.
right, like when you're doing payment, the last point that they actually transact to actually goods and services itself is what matters to a lot of folks. And in this case, Visa is a major, rails that enable that to happen. Just that the source of fund in this case is changing, right? Before this is a bank account, is it a credit account? Now it's just an assets class known as stablecoin itself. And maybe the last part itself, I think we hear the most about this actually in the early days, and probably you always heard about it. This on and off ramp thing that everybody keep talking about. Whenever you talk to folks, they will say that on and off ramp channel. What does it mean to you?
Do I need to use an analogy, or should I use very technical to know? Okay, just since ending on a fun note, right? I think on and off ramp, if I use your sandwich analogy, it would be the two slices of bread, and that really is how do I, again, that transfer of money, right, from fiat to stablecoin.
Yes.
And then the other part, which is the back to fiat. That's my interpretation.
No, so yes, I think that's close enough. I like the way you bring it back to the food itself. It sounds like we're all hungry, right? The last layer itself is where there's a conversion that's happening, because as all kind of assets class, you have to change it from something that you already used to, which is in fiat. Most of us have our funds in the bank account itself, to change it to a stablecoin or a digital asset medium before you can do the transfer itself. Will mean to say that there's someone is helping you with the on-ramp part, so which is the bread you talk about. And then after that, stablecoin to stablecoin transfer is being done. On the merchant end, a provider like us will come in to help them get back to fiat, because most of our merchants at Visa as well, and also our QR code and merchants on Grab itself, they only know of fiat, right? They only want to accept fiat.
Yeah.
So they only want the bread. They don't want the kaya in between, right?
Yeah. I don't want to have to do the off-ramp, on-ramp, right? Because to them, I just want to run my own business. I just want to accept cards.
Yes. So maybe change it a bit. Any funny or surprising story from your experience so far, talking about, being this space of, stablecoin payments or cryptocurrency that you want to share?
Not really, but I think if I go back to I don't have NFT, but if I go back to some of my, small investments, I like a normal investor, I often fear that, I will forget the password to my wallet.
Yes.
And I think that's something that, hopefully there's some technology that will solve for it, but again, that goes against the whole concept of DeFi.
Yes and no, right? I like this point, actually. I think I talked about this before a lot of time. This is why I'm a strong advocate that I think this will not completely replace the bank, right? Because, bank has been around for years, thousands or hundreds of years maybe. And the fact is that they are trust anchored. You trust that bank, right? So I think some of this technological mumbo jumbo is something that you would like to trust somebody with, right? And of course, you don't have to trust everybody. I think the key essence, if I really distill it down about, blockchain decentralization, is having a choice. You have a choice of who to trust.
Yeah.
It's not that you trust nobody, right? You have the choice, and you can take away that trust if you don't trust that person anymore, right? It promotes good behavior itself. So in that sense, like Visa is a trusted anchor, right? And we want to be able to allow you to work with Visa. There's nothing wrong with that concept itself, because I think the far end world that it's been described is a bit dystopian, right? Everything is decentralized, you trust nobody. I hope the world don't go there, especially what we're going on right now. We do want to have some level of folks that we can trust.
Actually, it's true. Can I just build on the point? Because I know, when we were chatting offline that StraitsX, you talk a lot about trust and the fact that you're Singapore-based, and we have a very, supportive regulator, right?
Yes.
With very clear guidelines on, what they encourage and what they don't encourage. I think being able to work with a partner like StraitsX who share the same values as us, which is at the end of the day, we want to drive trust. We don't want anything broken in the ecosystem. I think really helps us move forward really fast.
Awesome. So I think we're coming to the end of this podcast. So maybe some final closing statement or questions for Adeline itself. So given all the things that we talk about today, where do you think are some of these areas you are most passionate about, or personally, or on a Visa end itself, related to stablecoin, or is it on the card issuing side? Which area do you think you want to share about?
I think you mentioned it a little bit just now. I think we're just at a really, really early stage. If we think about, we're now April, right? We're now in April. If you think about, the next 8 months, I think we connect again and share the numbers, towards the end of the year. It's going to be some other crazy growth.
Yeah.
And I think that's what gets people really excited, because it's not just talking about something philosophical, right, or potential. This is actually real momentum. And I think that momentum will continue to grow. And we could uncover new use cases that, maybe there's a bet on whether there'll be, the 3-4 use cases that I mentioned is what settled down. But whether there'll be new use cases, I bet you there will be new use cases that we haven't imagined.
No, definitely. We were really talking about some of that with your team yesterday about agentic payment, and that will take a whole episode. But we probably want to come back again when we have the time and have to talk about. Stay tuned for the next one. But exactly, I think it's really in the first inning, and this is the numbers that we have seen that's the most exciting in multiple years that you have seen so far.
Yeah.
But from all the signs it's showing, is the growth is not stopping. Even though it started with a relatively lower base, but we're now seeing numbers that are, comparable to what we have seen that will take at least 3 to 4 years to get to.
That's right.
So thank you, Adeline, here today for coming for the podcast. It was hopefully we'll get you to come back again. We'll talk about the next thing we want to work on it together. Teaser for next time.
Are we going for kopi now?
Yes, we can do the actual kopi and other session that we all enjoy a bit more. Yes. So thank you everyone for tuning in to the Stable Money at Scale. If stablecoin are becoming the financial infrastructure, let's make sure they're built for everyone. We'll catch you at the next episode, and hopefully, thanks again, Adeline here and Visa itself for hosting us here today at the Visa Innovation Center.
Thank you.